GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's more stable than Jerome Powell's decision making. I'm your host, Jay Hamilton, and today we are joined by Andreas Steno Larsen, CIO at Steno Global Macro Fund, also CEO at Steno Research, a fellow podcaster and contributor over at Real Vision. Guys, this guy is one of the macro experts in the space. Today, we're going to talk about, you guessed it, macro. We're going to talk about liquidity. How can crypto and risk assets gain this year if we are not seeing liquidity increase? We're going to dive into that. And then we're going to talk about what are the different sources of liquidity that the government has to play with and where might those flow into crypto. We will talk also about, can we see an altcoin season based upon the current macro setup? What changes would need to happen in order for us to see an altcoin season? Now, when you guys listen to today's episode, we're going to be talking a lot of macro concepts and how markets react to that. If you want to understand this deeper, I highly recommend you go read a report that the Milk Road Pro team wrote on February 1st. It's called How to Check the Market Pulse. We'll throw the link in the show notes. So that might give you a little bit more background, more understanding of how macro works. Today's episode is brought to you by Consensus Hong Kong. Next week, one of the best conferences in the space, February 18th to 20th. If you want a 15% discount code, hit the link in the show notes and use the code MILKROAD to get 15% off your ticket. Today's show is also brought to you by Crypto.com credit cards, one of my favorite credit cards. You guys should check it out. Check out the link in the show notes. Without further ado, Andreas, welcome to the Milk Road Show.
Thanks very much for having me, Jay.
Super excited to have you. We just found out that you live in Copenhagen, which is where I eloped and got married with my wife. So I'm feeling a connection already. I'm feeling some good energy. Let's start, zoom out, and give us sort of the fourth grader background on how money is created in economies, because I think that'll help people get the base understanding of a lot of the discussion we're going to have today.
Yeah. So Jay, earlier this week, Jay Powell basically said that the quantitative easing, a concept that was invented right after the great financial crisis, was not in play for the Federal Reserve until interest rates are back at zero. And that message made the rounds on X, on various media outlets, because, the immediate interpretation from a lot of macro pundits, but also a lot of investors, was that, okay, we're not going to see new money this year. But I think that's a false assumption. And it relates to this whole discussion on how we create money in an economy. Because the Federal Reserve is not the only agent that can create money in an economy. Your bank, Jay, if you have a bank, can create money. The public sector, so in your case, Justin Trudeau, he can create money. And those are basically the three agents creating money in an economy. So the central bank, the public sector, and the private banking system. So how does that work actually? Okay, a central bank is basically in charge of what you can call the base layer of money. So they can create money out of thin air via, for example, this QE measure by buying an asset from a bank with new money. They don't need an excuse to do that. They can just do it. But in all honesty, I've been working as a bank treasurer for quite a while. A private bank can do the same. A private bank can create money out of thin air. So if you go there and ask for a bank credit, if you're buying a new car, if you're buying a new house, they can create that money out of thin air. It's not like they move it from one account to another. As long as they keep their so-called leverage within the constraints given by the authorities, they can actually create money out of thin air. They can just put new money into your account. So that's a form of liquidity as well, right? If a lot of people go down in their local bank and ask for a credit, they'll probably get it given the current macro conditions, in my opinion. That's new money created. And then the public sector is actually also able to influence this picture by running a deficit. Because if you run a deficit as a government, you basically borrow from future money and spend them today, right? So that's moving liquidity into the present. And we've seen deficit spending all over the globe, especially since 2020, right? So that's been a major source of liquidity as well. So if you look at these three agents, fair enough, the Federal Reserve is not really willing to play ball right now. They're not adding dollars, but the public sector is adding dollars still. I know Doge is trying to contain that, but if you look at the private banking system as well, they're also starting to add dollars again via new loans to households, to corporates, etc. So I'm not overly worried that we'll see an increase in sort of the broader measures of money this year because of 2 out of 3 agents still adding.
Okay, so the question on everyone's mind, and the thing that I think our audience really understands, is that more liquidity generally means risk assets increase. So that's what everybody's sitting waiting for is, when are we going to get more liquidity? And what you're saying is one of these three agencies, and I think this is an important concept because I think everyone focuses really on one of these agencies. Everyone really focuses on the Treasury and what are they doing as if that is the only form of liquidity injection that we can get. But you're saying there's these other two forms. So what are the upcoming catalysts that you're looking at that could bring liquidity from these three different agencies?
So first of all, in relation to the Treasury, as you mentioned, we know that the debt ceiling is currently in place in the US, meaning that they cannot issue new debt unless a deal is passed in Congress. I don't think the deal is around the corner. So it's kind of the backdrop we have right now that they cannot issue new debt. But the US Treasury holds roughly 800 billion worth of US dollars idle at an account at the Federal Reserve. So look at it this way, the US Treasury uses the central bank as its bank, basically as you would, right, with your deposit. So they have a
my bank doesn't
deposit.
have $800 trillion sitting in reserve, so slightly different bank account, but yeah.
You'll get there someday, mate.
I hope so. Thanks, man. We'll all get there, right?
Yeah. If we make the right investment decisions, we'll probably
Yeah,
get
that's
there.
why you're listening here. We're going to get you guys there. No, not financial advice.
But the point in case here is that the US Treasury can actually add that liquidity to the private system by spending those dollars instead of issuing new debt. And that's exactly what they're going to do over the next, say, 6 to 8 weeks, because they're not allowed to issue new debt and they're running out of extraordinary measures. So they'll have to spend the cash they hold idle. And that's actually pretty good news. So that's one source of liquidity incoming.
And so just to be clear, just for like a technical language here, that's known as the Treasury General Account. You'll often see TGA on Twitter. That's what we're talking about here is this TGA account. They're drawing down this account in order to inject. And the reason they're allowed to draw down that account is because we've gone over the current debt ceiling, which 36 trillion is the current debt ceiling.
Ish.
Somewhere around there. Okay, so they're allowed to do that. And that is soon. That is like, is it already happening? What's the timing for that?
It's going to happen over the next 6 weeks. So they'll have to exhaust so-called extraordinary measures before they use the money on this TGA account. And they're roughly 70% there. So we're talking a couple of weeks from now, they'll start spending this.
Okay. And on a, how much does this matter? Like, I think, I'm sitting here listening. Okay, great. We're getting within 6 to 8 weeks, we're going to get more liquidity. Is this significant? Is this move the needle, this type of liquidity?
It moves the needle on the margin, but it's not a biggie. So the main issue here is that we know that it's a temporary liquidity addition, because as soon as a deal is passed in Congress on the debt ceiling, they will replenish this facility. So they'll basically issue money and then take money back into this facility. So we know that it's a like 6-8 week phenomenon typically. So it's a temporary boost, better than nothing. But it's not something that we can permanently look forward to, if you know what I mean. So it would be much better if we got some sort of permanent liquidity addition. And I struggle to see that permanent liquidity addition from the Federal Reserve this year, given what Jay Powell said earlier this week about them not adding permanent liquidity unless we're back at 0% interest rates. We have quite some room to get there. So our only hope this year is the private sector, basically. But I think we can rely on the private sector, and that's why I'm pretty bullish. this year.
Mm.
So look at it this way. There's a quarterly survey called the Senior Loan Officer Survey. SLOOS is the abbreviation.
Great abbreviation.
Yeah, if you lose, if you if you snooze, you lose. That's my typical saying around that survey because it's pretty important. But it's a survey like asking households, corporates, etc., whether they demand more loans or not. Um, and currently they do. So the optimism is basically skyrocketing in this survey. Um, when there's an extra demand for credit, for loans, it's typically because business owners, households, they plan on expanding something, refurbishing something. So it's pretty good news. And this survey was out just a few weeks ago, and it kind of hinted at a pretty decent pickup in the demand for loans. So we'll see a pickup in credit in the banking system, despite the lack of liquidity from the central bank. And that liquidity is just as good as the other source of liquidity. It might even be better, right? Because if you take up a loan and you buy a new factory, whatever, someone will be in the receiving end of those dollars, right? Or Canadian dollars, whatever, right? They'll get a deposit and they can buy crypto, equities, whatever, to some extent with those dollars. So it is an addition to the liquidity pool, just based upon a money creation in the private banking system. And I think that source of liquidity is your hope this year as an investor.
Mm. And so what is the timing and projections for that? What do you expect to see? Is that soon? Is that later in this year? And does it happen in a short period? Does it go to a long period? Can you give us some scenarios to map out what you think that could look like this year?
Yeah. So first of all, I think the banking system is much more friendly towards risk than it was just a year ago. And it is driven by, first of all, legislative changes upcoming from the Trump administration. They're going to re-implement the Wild West in the banking system. No rules, no capital. Go ahead, provide loans. We want the golden age here and now. So I actually think this is a story that will unfold over the next, say, 2, 3, 4 quarters on a trend basis. My best guess is that the cycle in crypto and macro, generally speaking, peaks somewhere late Q3, early Q4 this year. So we have a couple of quarters, maybe 3 quarters of very, very decent growth in lending ahead of us, which is good news. So I think it's way, way, way too early to call the peak in this cycle. And I don't know whether you share that sentiment, Jay, but I've kind of gotten the vibe over the past, say, 6, 8 weeks that a lot of people think the peak is already in.
Mm-hmm.
And I think that's wrong,
Mm-hmm.
given how the business cycle and this whole credit cycle in the private banking system is evolving now.
Yeah, I mean, part of me says that it's a weird state that we're in right now, where you have retail sentiment at such a low for a bull cycle. But then I always remember, like, this happens. We all get impatient, especially in crypto, right?
Mm-hmm.
Like, crypto is notoriously impatient and also notoriously very reactive to volatility. And we're in the most volatile asset market. So there, you kind of have to remember that pullbacks are normal. Doesn't mean that it's over. And I completely agree. I'm still very bullish on this cycle. I think we're just in a standard bull cycle pullback right now. But at the same time, a lot of people have altcoins, and you get wrecked when you own a lot of altcoins and you go down the risk curve. And so I think there's a lot of people that are down bad, and there's a lot of pain out there, which is what leads to these really heavy negative sentiments that we see. But then on the flip side, like, macro looks great. And then institutional sentiment is also really strong. Whenever
Yes.
we have anybody from the institutional side on the show, which we do all the time, they're sitting there being like, we've never been so bullish. All of our clients, everybody's feeling great. So yeah, completely agree.
Yeah, but I'll give you this a piece of anecdotal evidence, right? I'm running a global macro fund, and it's not our bread and butter to trade crypto. But we've dipped our toes here and there, crypto, at least indirectly via equities. And, I think that's the sign of the times we're in. Institutions are getting more and more interested in this space, and they are a lot more sticky buyers than retail buyers. So, I agree perfectly with what you just described here, that the institutional sentiment is much better than the retail sentiment. But I also kind of get the vibe that the Trump coin, Dave Portnoy's terrible attempt of launching a meme coin as well. Some of these ill-timed attempts of launching meme coins and the subsequent failures, they haven't done a lot of good for this space over the course of the past 8 weeks. So, the sentiment in retail is probably driven by that as well, more than
Yeah,
it's.
because that's what retail's buying, right?
Yeah.
And so, yeah, you'd also be pissed if you bought Trump coin and then lost a bunch, which a lot of people did, or you bought jail stool. And I mean, that's why do not buy this stuff with you want to buy this stuff and trade it 1% of your portfolio. Go ahead, as long as
Yeah.
you're willing to lose it. But if you're buying it with a large chunk of your portfolio, yeah, you could lose all your capital, and then you're down bad and really stressed out. Okay. Let's come back to Treasury. You're thinking short term, a little bit of liquidity from the drawdown the TGA. Long term, not very hopeful we're going to get much from them this year. Private banking system, you're feeling pretty good about, thinking that's the main liquidity driver this year. What about public system? Anything that we can get from that agency this year?
Hmm. So, if you look at Elon Musk's project right now of yeah, basically trying to increase efficiency in the public sector, uh, that's not going to add liquidity, but it's going to bring bond yields down. And bond yields are very important when we talk about liquidity, because ultimately, if bond yields drop, it's easier for banks to borrow against the value of those bonds that they hold. And that essentially means that it's easier ultimately for you to get a loan in the bank, and it's easier for a corporation to get a loan in the bank and all that. So bond yields coming lower as a consequence of what Elon is doing right now is ultimately a very, very bullish thing. But it probably requires some pain in the meantime, right? So, I'm very upbeat on that Doge project. I know you're a Canadian. I'm Danish, so a lot of the other stuff happening in the Trump administration right now about claiming territory, I don't feel too happy about
Not really
that.
down with that. I don't want to
No,
be the 51st state. No thanks, Trump. And I don't think I don't necessarily think that the whole world wants that either. It's just Trump being Trump and
yeah,
being a bully in negotiating tactics, right? If you are looking for a crypto credit card, some way to spend your on chain money, some way to get more money on chain by collecting cash back in crypto, highly recommend you guys check out the crypto.com card. It's one of my favorites in the space. I'll tell you why. No annual fees. Love it. Access to airport lounges if you have certain levels of the card. I have the icy white card, so I use it when I travel to get access. Many perks, Netflix subscription, Spotify subscription. Check out the link in the show notes to get your crypto.com card today.
yes, exactly. Maybe he can get Greenland if the price is right. Oops, there goes my lighting. But but if the price is right, he can get Greenland. I think that's fine. They even wanted themselves. But enough about that. The Doge project is designed to bring bond yields lower. I think the administration will have quite a few tricks up their sleeve in terms of trying to bring bond yields lower. Some of them are very, very technical in nature. But Scott Bessent, the new Treasury Secretary, I've known him for a while. Um, Very, very, very good guy, and he knows how to play markets, and he knows how to bring deficits down. He knows how to bring bond yields down. So, all in all, I still think it's a decent assumption that the Trump administration is pro crypto. I think it's a decent assumption that they're pro markets. But all of this noise around tariffs and territorial gains and all that, forget, breathe easy and stop listening to it, because it doesn't really matter all the time.
Really?
Yeah.
Okay. So you think it's just noise. You're not worried about tariffs, and I mean tariffs feels like the number one thing that people want to talk about these days.
yeah, but it's for me, it's noise in my investment process because I first of all, I don't feel like I have an edge in forecasting the next step on tariffs, right? And who's got an edge in
Who's got an
forecasting
edge
Trump?
there?
Yeah,
Yeah.
yeah. And secondly, this concept of reciprocal tariffs announced today, right? Um, I am of the view that it will lead to a race to the bottom of tariffs, and I know that's a very contrarian view, but look at it as tax competition. We've seen a race to the bottom on corporate taxation within customs unions before, and if we get some sort of like global tit for tat tariffs war, it will ultimately end in a race to the bottom, yeah, rather than the race to the top. So I think the end game here is very benign. But yeah, in the meantime, you'll see loads of stories. You'll get some drawdowns in crypto because of tariffs headlines, but buy when you see that. Don't sell.
Hmm. Okay. So you mentioned you're bullish right now. You're feeling pretty good. Any factors that we haven't touched on from a macro standpoint that are making you bullish right now?
Well, if you look at the intersection between macro and crypto, uh, I think we're basically at a crossroads right now in terms of the adoption of crypto from treasuries and from central banks, right? Um, so we have a few countries on Earth already buying. Uh, we have plenty of countries on Earth investigating this topic. And I can assure you, even in Europe, this is starting to become a topic. The central bank president in Europe, Christine Lagarde, the Frenchman, was asked about Bitcoin during her latest presser. We've basically never ever heard a question on Bitcoin during an ECB press conference before. That was a newcomer. She handled it like a bureaucrat, so her answer was terrible. But it's the first sign of something moving here, and I think when we get to the phase where technology and the underlying technology and the crypto coins themselves will be adopted by the official authorities. I guess that interim period is basically where you'll make the most money, right? Once it's adopted fully, might be it, but we're obviously not there yet. Only one country on earth really truly looking at it right now. So I think this is a really, really interesting backdrop.
Mhm, mhm. Yeah, and I think the question on everyone's mind is, when does this happen and how quickly does it happen? And nobody has a crystal ball on that, but it certainly feels like the th- all of these large institutions, governments, sovereign wealth funds are very aware of it in terms of Bitcoin. They're all aware of it. And once one does it, and they're already, and there might already be countries doing this. We
Yeah.
just don't know about it, right? I think that is quite likely that it's an arms race, right? You have a limited supply asset that you would be everybody will have to do it. There's no choice. And we're really already in that phase of it's just not public. It's just not publicly being announced yet. So I think I think that's here we are. It's now. And then at the same time, it keeps coming back to this incredibly negative sentiment in the space right now. Let's talk about the flow of so you feel good about liquidity coming this year still. That's great. Let's talk about flow of how that flows into crypto. And in particular, we're talking about Bitcoin, but in particular, altcoins, because altcoins are really getting crushed right now. They are, down. Most of them are down. I mean, they're kind of ranging and bumping back up, but a lot of them are down quite bad, particularly if you're down the risk corridor in AI coins or meme coins. Um, how do you time altcoin season based upon macro? And do you think we still get an altcoin season, or does Bitcoin dominance just continue and we're in a totally different cycle?
So in full transparency, in my personal account, I have 0 Bitcoins and only altcoins. So thank you for
Really?
reminding me about the most recent sell-off. Um, I I'm still very bullish on the altcoin season, and as a macro guy, I tend to look at the most important gauge of the so-called business cycle, the ISM manufacturing PMI, as my guiding star for the altcoin season. The manufacturing PMI is, it's kind of a boomer concept, right? You call up supply managers or purchasing managers at various manufacturing companies in the US and ask them whether they have an order intake or not, and whether it improved relative to last month. And when you see a sharp move higher in the business cycle, it's basically a result of households demanding more physical goods in the economy, you know, buying cars, buying stuff at Walmart and all that. And we're exactly there now. We're starting to see the first signs of this business cycle moving up. It's taken a long while, and it's probably been held down, this business cycle, by interest rates being 5-6% in some of the major economies on Earth. But I'm still of the view that interest rates have peaked. Bond yields are coming down slowly but surely. So we're starting to see positive signs out of this business cycle. And we'll see this gauge of manufacturing activity probably rising, say, 10, 15 index points the next 6 months. That is historically where you should buy altcoins. There's a very strong link between Bitcoin dominance and this ISM gauge. And the link is negative, right? So Bitcoin dominance fades when this gauge increases. So to me, that's your bread and butter analysis from a macro perspective when you invest in altcoins. So I shifted my exposures ahead of New Year's. So far with a terrible timing, but I'm in it for the long run. So I'm not really giving up on this thesis yet.
Mhm. So, and I think that you make a great point that like, don't give up on the thesis is something that I hear a lot of people asking. A lot of people in our community are asking this question right now of, should I be selling out on my losses on. Look, altcoins is a very broad term. Is probably one of the issues here, right? I almost don't like the term, right? Like basically, it's like every non-Bitcoin token, which like there's like millions of them. So this does not necessarily apply to every single token, but uh, the this you have made this decision and you are sticking to it because you have the conviction that the altcoin season is still going to come, and so you're not selling out on losses just because tariffs, deep seek, all these like external factors, yeah, they affect markets week to week, but you still believe in the long term. uh, what when we look at the rest of the year play out, so you think, give us, you mentioned this a bit earlier, give us your thesis on the rest of the year. What is the scenarios that you see playing out?
I think the main issue right now is that we are stuck in between headlines on tariffs, DeepSeek, Chinese-US tech wars, all of that. And I'll allow myself to replay what happened in 2017 when Trump took office. It was one big mess during the first couple of months as well. This guy is an eager beaver, right? He wants stuff done during the first 8 weeks of his presidency, and then he wants to play golf for the remaining part of the presidency. That's how he is. And, I'm kind of stuck with the same vibe right now that, he's just laying every single part of his policy platform out there now and signing executive orders. He's used to running a large business, right? So, when you run a large business, you sign executive orders and then you ask your minions to fix it. And he'll sign everything over the next, say, few weeks, ask his administration to fix it, and then play golf. And, from that timing, I know this is, I'm kind of exaggerating it, but, all of that noise within the Trump presidency, you should expect that to be very, very front loaded during his term, right? Because he's such an eager beaver. And as soon as we get past that, I think the confidence among retail investors will return. Because the Trump administration has taken a lot of good steps towards embracing technology, embracing crypto, embracing the banking system, allowing the banking system to increase credit and all that again. So they want a golden age, and they want it now. They don't want it in 6-7 years. Trump is dead in 6-7 years, and he wants his moment in the sunshine now. That's how I look at it. So the cycle is here and it's playing out now. It's not playing out in a year or two. It will be this year. And I think it's very 2017 like. And 2017, for those of you who don't remember, and some of you were probably not even involved in the space at the time, it was a crazy year in a positive sense.
Yeah, but it did play out, I think, as you're saying, very similar to how it is now, where the start of the year was rough because Trump came into office and made all these changes, and then we saw this incredible bull run mania, which we have not seen yet. I think that's the other reason why I feel pretty confident that we're still in this bull cycle is we haven't gotten even close to mania yet. Like no. Maybe, some people say maybe we got that, a year ago with the Bitcoin ETF, but not really. And then maybe we got that in December with the Trump trade and him winning the election, but no, not really.
Yeah. But maybe I should specify, because I prefer transparency around topics like this. So when I expect an altcoin season, and that's how I've positioned myself. Basically, I'm in ETH, Solana, Sui, Link, stuff like that. I'm not far out the risk curve, and I think it will take proper quantitative easing for us to get super returns in Trump coin and jail stool and shit like that. Pardon my French, but
it is shit.
Yeah. So stay focused on stuff with an embedded value, and some of the tokens I mentioned, they obviously deliver.
Andreas, absolute pleasure to get you on the show. Thanks so much for sharing your knowledge and breaking it all down for us today. Everybody listening in, as I mentioned, if you want more details on macro and how it moves markets, go check out that pro report. We'll link to it in the show notes. It's called How to Check the Market Pulse. And if you don't follow Andreas on Twitter, make sure you do. We'll also link to his show because he makes a great macro show. So if you want more of this on a regular basis, you guys should check out his show as well. Andreas, thanks so much for joining us today.
Thanks for having me.
Thanks for listening in, everybody. Have a wicked awesome day. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.